Let me say something that might piss a few people off here. The exact setups that you're being taught to trade are the ones professionals are using against you. Breakouts, support and resistance bounces, orb, trend line touches, all of it. And the worst part is they actually look right when you take them until they don't, until price rips the other way and you're still sitting there wondering what the heck just happened. How did that just happen? Here's the truth. Most people never figure out or get told. The best moves in trading don't happen at the level. They happen after what happens at that level, after stops get taken, after traders get trapped, after people are forced out of their positions, forced flow. That's where the real moves begins. And once you see this, you can't unsee it. It's like seeing through the matrix. Look, early on, and I struggled with this for a while, I was never the type to watch a bunch of different YouTube videos and listen to a bunch of gurus, because instantly it smelled like fake bullshit to me. Early on, I caught on to that smell very, very quickly. But I just like support, resistance, smart money concepts. I went down some of the same paths others did: order blocks, support and resistance, demand, premium, discount, all that stuff. I would chase what I thought was the cleanest breakout I'd ever seen. Everything lined up perfectly. Perfect resistance, multiple touches, everyone watching it. It breaks, I go long, and for like 10 seconds, I feel like a freaking genius. Price pushes a little bit higher, but then it stalls and I start getting nervous and it starts pulling back and I'm thinking, okay, normal retest, we're good. Then it drops, and it drops hard, straight through the level, straight through my entry, straight through my stop loss, and I'm out. And I'm frustrated. I'm confused. I'm thinking the market is random. Or here, right? I draw out my order block, whatever, wherever it is. I would go short because that was my idea. Price would rip up, take my stop out, and then go into my direction. Right? I'm blaming the market maker. Everything's rigged. It's BS. None of these strategies work, so let me go find a different strategy. But what I didn't realize at that time, and what I now realize, was that breakout, it was never the move. I wasn't trading the opportunity. I was the liquidity. And after, blowing up accounts and losing and spinning my tires for a year and a half, something changed, right? I keep doing this. It keeps taking me out and going in my direction. Something's happening here, right? I stopped asking, where should I enter? And started asking, where is everyone else entering? And where are they wrong? Let me show you what I mean. So what are you taught at the end of the day? You're taught opening range breaks, you're taught breakouts, you're taught smart money concepts, you're taught support and resistance. When price breaks here, I go long. When price enters this order block, I go long or short, depending on which side of it you're on. But look at this chart, right? What happens more often than not? The sweep and then the dump, the sweep and then the pump, the sweep and then the dump, the sweep and then the dump, the sweep and then the pump, the sweep and then the dump, the sweep and then the pump. This is just retail emotions in a chart. Price break, level, go long. Let's look at the trade today on SoFi. What did we break? We broke the highs. We broke yesterday's high and the day before's high. And then what did retail do? As soon as we poked our head above that level, they smashed long. Don't believe me? Well, we can go in and look at the delta, and you can see right here, 21K, more buys than sells. 13.5K, more buys than sells. Little bit of shorts, but then 14.K. A ton of people bought that thing and top ticked it, and we're what? Liquidity for the bigger players in the market. And I want you to be honest with yourself. If you've been trading for any amount of time, you are taught to trade in this for a very specific way. You see resistance here, you're told if price breaks above, buy the break. If price rejects, short the resistance. Sounds logical, it's clean, it's simple, but think about what this creates. Breakout traders buying above the level, short traders placing stops just above it, right? So anyone who went short here has stop losses above and from higher, right? All the way down. So there is just naturally orders clustered here, right? Shorts place stops above, breakout traders pile in, everyone's clustered in the same area. So the market's not out to get you. You just happen to place your order. I just happen to place my orders back in the day where everyone else did. And that area becomes a magnet, not because it's magical, but because that's where the money is. And this is where the concept of liquidity really comes in. And look, liquidity, it's just a fancy word for orders, stop losses, and positions that can be taken. The market needs fuel to move. And where is that fuel? right above highs, right below lows, right where everyone is positioned. So what happens? Price pushes above that level. Breakout traders, just like here, hit buy, just like I showed you using delta candles. Shorts from over here get stomped out. There's liquidity being created that then what? That then what? Fills into the shorts, the whales up there gobbling all that up, right? Now everyone's long here because when the shorts have to cover, that's a buy, and breakout traders are piling in. Everyone's long. It feels bullish, right? And then price snaps back. Now what happens? Breakout traders are instantly in the loss. They panic, they sell, their stops get hit, late buyers are trapped. Stops get hit on the way down. That's selling pressure. That's fuel. That's what creates the real move, not the breakout, but the failure. And the beauty of it is it's logical, right? Retail trades the level. Professionals trade the reaction after the level fails. The move doesn't start when people are right. It starts when they're wrong and when they're forced to act. This is why I only focus on liquidity sweeps, trap trailer, momentum after failure. I'm not trying to predict breakouts. I'm watching for, did we take stops? Did price fail? Are people now stuck on the wrong side? Because that's where the edge is. So here's what I want you to do after this video. Go back to your charts, look at your last 10 losing trades, ask yourself honestly, did I enter at the level or did I wait for the trap? Because if you keep trading like everybody else in the market, you're going to keep getting the same result as everybody else. But if you start thinking differently, if you start looking for liquidity traps and forced moves, everything changes. And if this clicked for you, if you want to learn more, right, let me know down below. Say, what's the liquidity, right? I read them, I see them. And if you want me to break down real live examples of what's happening in the market, hit that like, hit that subscribe. I do it every day during live, myself or Eddie. I'll show you exactly how I trade it step by step. But on top of that, I have free courses. We're not course sellers. I know there's a lot of influencers in trouble right now for pushing $6,500 courses and buying Lambos. That ain't us. The information's free. It's only going to cost you your time. TacticalEdgeTraders.com. Links down below. Doesn't cost you a cent, and I will walk you through this for free. Smash that thumbs up, subscribe, turn on notifications, and we'll see you guys for the next one.